Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on euro currency. Yesterday we discussed the situation and come to conclusion that overall picture looks like the 50-50. So we have identified some signs that could suggest strong downside action, but at the same time market, at least theoretically, has the ability to keep going higher. It's because the breaking points, the major vital points, as for bearish scenarios, for the bull scenario, are still valid. So it's some kind of the equilibrium on the market for now on the short-term charts. But today and actually yesterday in the evening, situation started to change. So we will start from the considering cross-market analysis. So first of all, I would like to show you the chart of the 10-year bonds. Take a look what has happened recently. The yield on the 10-year bond sharply decreased, so it has straightforward downside action with some kind of the reversal type of performance, which is temporarily make the dollar weaker. And based on this background, although on the euro currency you might not see any significant changes, this is definitely the background in favor of the possible upward step. Although, as on the Great British Pound, as on the euro currency, you do not see, really thrusting action on the intraday charts by far. The same you could see on the dollar index. On the dollar index picture, it looks a bit, more active as compares to what we have on euro currency. Here is the performance with this kind of hand shoulders or something. And so it looks a bit more active than on the euro. At the same time, closer look tells us that, as I said, overall action stance, behavior on the market stands relatively slow. We do not have any, significant upward performance, some acceleration on intraday charts, and this setup is still valid. So market hasn't break the top yet, and currently we do not see any signs that probably it's already ready to fail. The flirting of the MACD, of the lines of the MACD, haven't given us any grabbers here, so we don't have any patterns of this kind. And also another thing that might need to consider is that if we start speaking about the hand and shoulders or something of this kind, these hand and shoulders look absolutely different. So in terms of it's actually 180 degrees opposite to the normal hand shoulders. So you have the collapse here very fast, but upward action stands relatively slow. This right arm is forming for a considerable period of time compared to the overall shape of the pattern. And it's also, you do not see any domination of the bulls yet in this part. So it's when you see the hand shoulders in the final stage, you prefer to see that the bulls start taking control of the market, starting the speeding up the overall price action, but you do not see it here. So that's why, despite that we have some retracement on the 10-year bonds, the signs of the bullish activity on the euro currency doesn't look too strong yet. On the Great British Pound, approximately the same story. So we have our hand and shoulders retracement that we discussed. It just works perfectly. You could see this downside action, and you can see market is trying to return back and starting the upward action, but you can see how choppy this price action is. So we do not see anything of this kind. This is really, you could see that how hard the overall upward action now is taking the speed. So on hourly chart on the euro currency, here is actually the few targets that we could consider for a bullish scenario. In general, if we're speaking about our scenarios, we said if you would like to take short position, please stop about this, dealing with the butterfly. If you would like to go long, take place stops below it and just watching for upward direction. Market has to stay above this area to keep the bottom of the right arm to confirm the bullish ambitions. For now, everything goes just great. So if you have taken position, you probably have a more or less positive result at the moment. And here, what we need to see today, I think that this pattern might be the key to the answer, what we will get. Because if bears are still holding the control over the market should not actually keep going higher to the neckline. It could form this catalyst triple to sell and start dropping. If this will happen, that might confirm the validity of the bearish context and really showing the weakness of the bullish context. In this case, if market will not able to complete the short and start moving down, returning back to the lows, it definitely will be the sign of the weakness. So keep an eye on the current performance, keep stops at the break even, just watch what will happen. Straightforward upward direction, of course it will be signs in favor of the bulls. So in this case, market will keep going higher. And today I would focus, if this will happen, today probably it makes sense to consider only this 112.87, 112.93 target. So I wouldn't consider high standing levels because of the lack of time currently. I mean, it's not too much time left until the end of the week and end of the session. Especially if you take a look at this ABCD OP, it stands even higher. So for today's session, I think that it might be just enough target. That's actually all that we have currently. As you can see, both scenarios are valid. Still, we do not have any touching of the vital levels as for the bullish scenario, as for the bearish scenario, but the signs that we see currently on 10-year bonds tells that euro could try to move higher. Whether it will be, well, whether it will destroy the bearish scenario, I don't know. It's difficult to say. That's why I think that currently it makes no sense to change something. So if you already have chosen the direction, and you really already have the positions and you have the stops in these positions, you probably could stay with it, especially because if you have longs, this probably already stands in some positive area. And just let's see what the final breakout will be, either to the upside or we still will get a bit deeper action on the 4 time frame chart with this XOP target and this butterfly pattern.